All right, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 23rd. Stuart, nice to have you back with us. And Maud, we haven't seen you for a while, probably due to GoToWebinar, but that was the link that you can use every time you come in. Glad to have Maud here. And then obviously, Mary goes, what about me? Mary, always glad to have you here as well. But Maud, nice to have you. Haven't seen you for a while. Stuart, likewise. And Evan hasn't been here for a while. Nice to see you three back. Busy night, busier than normal, so I'm going to jump right in. But normally we don't have this group of people unless there is a bad market, right? And for those of you that may have missed anything, it's kind of funny because both of you typed that in. If you miss a commentary, head to www.myhurleyinvestment.com and you can run to it. Again, bigger group than normal. For those of you that are here right now, if you go to the handout section, I've got a handout for you for today's webinar that I think you should take a peek at. And I think it's going to be helpful for a couple questions. One more if you have a question that you would like me to go over in class, email it. Yeah, I should say email, text me, call me, do whatever we got to do to get that answered. And we'll do the best we can to make sure that that we bring these up, because if you've had that question, chances are someone else has as well. But all right, the first question I found interesting. Why is the market going up right now? And the quick answer is it shouldn't be. But there are two things that I found for articles that might be helpful in going through with this. It is, I just lost it. It is right here. Number one, investors are holding near record levels of cash and may be poised to snap up stocks. So reason number one, possibly, is that there's a lot of cash on the sidelines. If you go through the reasoning, a record amount of funds flowed to money market accounts at the end of the year. These funds could be fuel for major stock rally. A lot of money market accounts, or a lot of accounts like ours, are holding cash. They calculated at 4.8 trillion at the week ended in January 4th. I also think some people think right now that the market is just down. It's just down, and you have a huge amount of people that think stocks are undervalued. I think all of those could be reasons. I mean, the reality is all of them could be reasons, but I don't think retail money moves our markets. So if you were to ask me in general, right? New money, the beginning of the year, moved markets higher than simple moving averages. which what does that equal? We have nothing more than a technical bounce. And that should be higher than. So what do I mean by that? If you look at the Dow Jones Industrial Average, we and it took 3 weeks, but we got a bounce above the 50-day simple moving average. And then the last week, it's been a struggle. It's been a struggle. And here we are finally getting above the 200-day, which means we should have some cash on the sidelines. I do find it somewhat interesting, though, because one of the next comments was made, why are we up so much for the year? This is the Dow, right? Let me bring up the S&P 500. Kevin, why are we up so much for the year? Which is, I don't know, I don't know if I would say so much. If I went to find the S&P, let's see, markets, S&P 500, going to year-to-date on CNBC. Year-to-date, we're up 4.7%. A 5% move is obviously not bad to start out the year. Up until today, we were only up 3.7, and 2 weeks ago we were only up 1.57, I believe. Let's see. Actually, instead of just spouting numbers off, got it written down. Nope, I don't. A week ago, the S&P was up. Well, that was 2.4. They're down last week. 1.45. So I guess it was 3.7. I don't know if I call that a lot, but we're bullish. And what we're doing is we're breaking these moving averages where we have some amount of stocks, some amount of buy orders stacked up when you can outrun the sell orders, right? Especially if you take a peek at the NASDAQ, 2 days, I mean, it's gone up 450 points. Going to hit that 200-day, it gets above that, we could see a pretty good move. I don't know if there truly is that huge amount of cash sitting on the sidelines. With us, we're at about 18%. And if someone was to ask me, how are we looking to trade? Currently running most stocks without protection. With protection, getting ready for earnings. I should say, and we are starting to add leaps. And you'll see those for Boeing should be in your accounts. Baidu could be in your accounts. JP Morgan is in accounts from last year. But we're starting to go with a couple leaps that we will take off. If things turn against us, we will take those off and just book our profits on them. I think you also will notice, and I'll have to find my day for this, but February. So I guess in all reality, next week, right? Next week, January 31st, we can add back in tax selling shares, which primarily were Meta, Disney, and what was our other tax selling? Meta, Disney. Meta, Disney. I should have a better job of having my stuff ready. Meta, Disney. Need my notes. Meta, Disney. Crying out loud. I know there was a third one. Meta, Disney. Oh, yeah. There we go. Bank of America for some small accounts. So if we had tax selling, we were ready to do it. We had them listed here. We were ready to go. But that is a January 31st. The problem is FOMC rate decision on February 1st, Wednesday of next week. So we do got to be ready for the worry that, hey, market could go down farther. So I'm going to hit that here in a second. So all honesty, technical bounce. It shouldn't be. I've got a second article I'm going to go over later on that talks about expectations of the market and so forth, but just some ideas, and just so you know, we're watching it, but it's a technical bounce. What's going on with China? Bill Branner sent me an article, and the short answer, before I saw his article, I would have said, what's going on with China? COVID, they are broke, and they have had the worst GDP numbers in 20 years ish. Pretty interesting that China's trying to open up. And I'm just going to put it this way. Opening up the second largest world economy is harder than you think. And that's the best answer I have for you on China. Yes, there are some stocks that are taking off, but I just want to use some common sense here, right? Common sense says, I'm just going to say blue chip stocks or fundamentally sound stocks that got hammered, good technical term there, right? Last year have huge rebounding potential. And that's our short answer, right? That is our short answer, that if you take a look across the board, Apple, cash heavy, recession proof, people still buy phones, it's a commodity now. They should do really, really good. Boeing, self-inflicted pain, getting 200 orders for planes, was trading up at 400, huge opportunity. Bank of America, great earnings, weren't exactly rewarded because it was a bad day in the market, are somewhat recession proof from a recession coming up. They make their money on credit cards, and they actually did okay on their trading. They should be okay. I mean, I can keep going on and on, right? Baidu, crushed because they were going to get delisted. Really not an issue. Crushed because China was going to go to war with Taiwan. Really not an issue. Crushed because we have Ukraine in a world war. man, I just don't see it the same way, especially when if you work at their fundamentals and you see how fundamentally sound these guys are, right? Disney should do very well. Ford down 70%, should do really well. I don't think Google L or Dollar General has that opportunity. Their fundamentals don't show the same, and they're starting to have some unique fundamentals that are questionable now. Coke's not down bad. Lockheed Martin's kind of down bad, right? Lockheed Martin has some opportunity. I'm going to stick Meta in here. Yes, they also are like Boeing, but Meta's been hammered with the same fundamentals as before, except they're spending their money. Micron has been hammered, but they're coming back. Square's been hammered, but they're coming back. Visa just hasn't moved. Great opportunity there. Verizon has been hammered, could come back, but they've got their business model's not doing extremely well. And I'm going to put Under Armour in here too. Under Armour hammered, very easily could be coming back. Most of these that are on here have been down 70% or more. Minimum 50% except for Apple. Huge opportunity to the upside in a lot of these positions. And it's nothing more than, hey, the market can get it wrong. We'll make money on puts. And in fact, I'm going to write that down. The market can get it wrong. We make money on puts. Convert that cash to more shares. Can't type correctly. For an exponential return. Man, that I gotta fix my keyboard. Exponential return on the way back up. That's all we do. There's nothing really exciting about this. For the two of you that answer those questions or ask those questions, did that answer them for you? And I think Bill Brandner sent me this article. Here's why China won't attack Taiwan. Very good article, but it's very pro-American military with the thought we're the best, so they don't dare do it. I like it. I would agree with it, but they should have spent more time in this talking about China's money issues and how there's no money flowing out or into China. It would have been a better article, but a very interesting article on why China won't attack Taiwan. And I just go through it. Go through it and let's see if I've got it answered for you. Are there any questions this group would like to ask about the market right now? And I know, William, you're going to ask. William, would you type it in one more time? We've got a lot of people here today, so I've got a lot of comments along the way, and I'm not going to find it again, William. So just highlight it and copy it, and let's see if I can answer that again. War is a great diversion for the people, no matter where you live. So when the economy tanks, go to war. You know, that has been true in the past. I want to tell you that's not necessarily true now, but history would say otherwise. So very interesting comment. Thank you, Williams. So Williams' question is, what about earnings? And that's what I'm going to call the proof in the pudding, right? To go up right now for bullish movement, you need three things. Up day in the market. You can have great earnings, and I've only seen a couple companies still go up with a bad day in the market. You just have to meet top and bottom line. You do not have to beat it, you just have to meet it. And last but not least, guidance. Come on. Guidance has to be yearly positive or raised. So because we went through last year, guidance is pretty low. So there needs to be an upbeat guidance, and I noticed it can even be towards the back half of the year. Doesn't have to be for the first 6 months. But if your guidance is positive or raised, even missing on one of the top or bottom lines, you have some pretty good upside opportunity. With that said, we do have a couple that are showing otherwise. If we were to take a look at Goldman Sachs, right? Blew it. Blew it. What an ugly looking chart we're seeing on Goldman Sachs. And now that it broke, if you can see where the arrows, usually the column arrows, the trend lines, and it broke to the bottom, expect it to head down very easily to its next support level, 330, or it may try all the way down to the trend line around that 305 area. That would be my expectation for Goldman Sachs. It missed, and it's taking credit risk and booking money aside. So big difference there. If we were to bring a couple more in here that I'm a little curious about, right? Here's Bank of America. You can see it did pretty good. It's trying to break out of that upside. If it does, it'll be to 38 to 40 very quickly. JP Morgan, for crying out loud, just get up there. It's testing, it's coming down. It breaks that 145, 160 will be the next stop to the upside. US Bank Corp. I know a couple people are looking at US Bank Corp. It is running up higher, did pretty good at its earnings. In the past, we looked at Zions Bank, who had earnings today. I don't know how they did, but a regional is taking off. Key Corp, we've traded that one in the past. It's also just ready for a breakout. If we looked at Wells Fargo, which we can't stand, I didn't think their earnings was really good, but they also are poised to break out above 46. Probably won't get above 49 though. Banks are not looking bad. In fact, banks have an opportunity, but those are the first ones that started reporting. We have coming up this week is the first of the 3 weeks of the massive earnings that we have coming up. If you're looking at earnings for this week, Lockheed Martin and Verizon are tomorrow. Bank of America and US Bank Corp are on Wednesday. Visa is on Thursday for us. You're probably going, Kevin, show it to us. More importantly, there are earnings. Zions was today. DH Horton, 3M tomorrow. GE Halliburton, Johnson Johnson, UNP, which is what, United. It's the railroad system. Five Below, Intuitive Surgical, Microsoft, Texas Instruments, Lockheed Martin, Verizon. Wednesday, Abbott, AT&T, FCX, which is Freeport McMoran, IBM, Las Vegas Sands, Tesla, Boeing, US Bank Corp. Thursday, Alaska Airlines, Altria, American Airlines, JetBlue, MasterCard, Murphy Oil, New Skin, Love, which is Southwest, Valero, Intel, US Steel, Visa. Friday's kind of low. Union Pacific, thank you. Friday AXP, which is American Express, Chevron, right? CVX, Chevron, Clorox, VF Corp. Some good ones coming up. Really no economic reports this week. We just have leading indicators today that were horrible, missed. Negative 1.0 versus negative 0.7. GDP coming up on Thursday, which is the previous GDP, so will look good for last quarter, but expect the next 3 quarters to look like garbage. Durable goods, very interesting. Durable goods, they're expecting to be positive unless you take out transportation. Durable goods on Thursday are supposed to be 2.9, but negative 0.2 x transportation. So taking a look at that one, it's rather an interesting understanding that, hey, durable goods are not expected to do all that well. Pending home sales are expected to be negative, and someone asked me that question. So let me go back up and type that in. Forgot that one. Come on, Mary. If I don't do it, you got to say, Kevin, you forgot my question, right? Mary asked, why was existing home sales good and new home sales expected to be bad? And great question. 2 reasons. First, existing home sales locking in a lower mortgage rate. And number 2, nobody really buys during Christmas. It just isn't, most families aren't saying, let's have to pack up and get out of our house 5 days after Christmas on Christmas Day. It's just not an ideal moving industry standard that, hey, let's get into an opportunity there. Someone else asked me questions, right? I need a trade. And I made the comment to that individual and to a couple others, JetBlue. And you could do a 3-month, 6-month leap bull call, try to run something at 850 to a $10 or $11 strike. And it's a cheap stock. I mean, if I was to pull it up, all it really is a cheap stock. It has its earnings on Thursday, but that's what we're looking at. Kevin, it might go down to $6. It might. So if it has bad earnings on Thursday, add a long put down to $6. Take those profits and dollar cost average your bull call, your leaps, your 3 or 6 month bull call has an opportunity here. Sometimes, and I will not confirm or deny, sometimes you might be putting on 20 contracts when you're putting on 2. And you can get out of 18 contracts being only 2 contracts and completely have your 2 contracts paid off because you have the default at 10 contracts on your option trading. So when you kick in 2, it's really the one you erased was not a single contract, it was 10, and you just changed it from 2 to 20 contracts on accident. So it's just an opportunity. If it got to $10, in fact, it would cost you right now for a contract 140, 150 bucks. Could get up to $10 and you double your money relatively quickly, somewhere between 10.50 and 11. I told you use 11 as your short side, 10 or 11. If you're asking me why, I'm going to use a highlighter. 10 seems to have been a resistance. Excuse me, 11 seems to be a resistance. Past resistance right here on 10 could be future resistance down the road. Past support right here. Well, I guess it was both, right? It just built a base there at $10. It might stop off at 10 right there. So if you're looking for a rather unique short-term $150 trade to try to make it 300, you could very easily do a bull call / leap bull call, 850 strike to 10, 10 or 11 for your shorts and see how you end up. 850 long call for yes. For those of you that don't understand, this is a long call. This is a long call, and these are short calls. So just an opportunity there. All right, let's see here. Will Taiwan, why China want to attack Taiwan? Again, it's because we're bigger and badder. I kind of just want to say I told some people so. Crypto is just getting trashed. For those that are worried that the government's going to start using crypto, there is truly nothing out there, and it's a loser for most of your constituents. So for those that think crypto is going to go nationwide or country by country, not there, not available. Really, I don't see any proof of that whatsoever right now. This was last Thursday. I just want to have people understand the Fed is in play next Wednesday. And because they shed a quarter point off of their last rate hike, does not mean that they're going to shave another quarter point off and only raise a quarter point. It would not surprise me to see the Fed do 2 of the next 3 interest rate hikes at 50 basis points. Yes, inflation was coming down with the gas, but that was not inflation coming down. That was the U.S. dumping our oil reserves into the market. It is not inflation coming down. In fact, we're buying 5 dozen eggs because my boys eat like there's no tomorrow. Our chicken coops and our chickens are gone right now. It's killing me that we're paying, well, we used to pay, $10.99 for, we're paying 20 bucks for 5 dozen eggs. It's just, there's got to be gold in these freaking eggs right now. It's unbelievable. All right. Something big has happened in the U.S. housing market. And a lot of people have been asking me, hey, what is going to happen with housing? I'm not sure. My bet is housing prices will probably still go down because they're so dang expensive. But here's 27 leading research firms that really start off on the high end that home prices will rise by 5.4%. And on the low end, they could drop by another 20. So I'm not sure where housing is. What I do know is I'm going to give you guys a lot of opportunity to see 27 firms and what they think, because let's face it, most likely the realtors are going to know better than the stock investor. So that's me trying to skip out on that question. Where do I think home prices are going to go to? I kind of would like them to fall a bit because, boy, my taxes have gone up significantly. I wouldn't mind another run up. If I could make another run up, I'm probably selling my place and waiting for a drop and buying some land to build my dream home on. But I have an article in here for you guys to go over on where the professionals think home pricing is going to be at. Interesting article from billionaire Howard Marks, where it goes back to the easy money is gone. You've got to work your numbers on your companies to understand the opportunity that your stocks have. That's all this article is. JP Morgan gets even more underweight stocks as over tightening rises risks. Another understanding of just how big markets are looking at putting their money. And again, I have the investors are looking at record levels of cash. All right, guys. Hey, what questions do you have for me if we weren't able to answer them already? What questions do you have for me that I can attempt to answer for you? And if I didn't answer the above questions correctly, go ahead and give me a heads up and I'll do a better run at those. And again, if you do have questions, just type me in an email. I'll go through them. Yes, of course, I'll go over that. So what I picked up, and I've had it here for a couple weeks, is the world of investing, right? Not timing is the best way to capitalize on stock market gains. And it's just a couple sheets here, right? Back to the best days versus the worst days. If you missed the 10 best days, the 20 best days, some people asked me for the proof in something that was easier to understand. And again, it's just why we collar trade. If you were to miss the 10 best days, you'd have a problem. You'd cut your opportunities by half over the last 15 years. And I just want you guys to see why. Again, someone asked, hey, could you put that into a chart format versus all the writing from a couple weeks ago? Here it is. This is why we collar trade, why we don't just run away from things. We'll protect. We'll protect on those down days. We never miss an up day in the market. And in the end, getting those exponential returns is really, really good. All right. Any other questions I can answer for you guys? If not, thank you for being here. I'm sorry this isn't maybe one of my more exciting commentaries, but it's kind of neat. When things are going good, let's ride that wave. Yes, we have not had some protection on. In fact, if you guys will give me another second, yes, we've let some things run. And a couple people have asked me, Kevin, why are you not protected all the time? It's technical analysis, right? In December, we saw our charts start to turn positive. We had a very clear technical bounce. So I'm going to say, if you were running a bunch of protection from the middle of December till a week ago, I might scratch my head a little bit and say, go back and study your technical analysis. It's a level 1 class. It's the basics of basics. You don't put bearish positions on bullish running markets. It technically wasn't real bullish until, well, probably right here, you get a bounce off of the 50-day that's confirmed, but you got to do some technical analysis. You got to take a look at what's been out there. Same thing, I'm going to go up to the S&P. Kevin, why did you start taking some protection off last week? We broke the 50-day. Kevin, a lot of my end of December technical stocks you were not running with protection on. We turned bullish. I jumped the gun a little early on the NASDAQ, so I'm sorry because I was following the S&P and the Dow. But it's technical analysis. That's all I'm doing. It's not rocket science. For how do you know? You don't run puts on stocks when you have a bullish market. Some technical bounces, that's all I did. So good questions there. All right, guys. Hey, have a wonderful week. Look forward to seeing you guys next week. FOMC meeting on Wednesday. We will probably be protected for that even after earnings on stocks. And don't be surprised if it's 50 basis points that we're going to go back down and test the lows of December. Guys, have a great evening. I appreciate your time. I'll do the best I can. Dave's having me start to get some of this uploaded myself. So I'll get this uploaded as quickly as I can. Guys, again, have a wonderful evening. I appreciate you being here with me. Great group. We hit over 30 tonight. Look forward to seeing you guys all again next Monday. Bye-bye.